This house in Tacoma, Washington is listed at $455,000, and we're going to walk through a real mortgage quote to talk about what the numbers would look like if you were the one buying this house. How much would your monthly payment be? How much cash would you need to bring all in with your closing costs and your down payment? And then how much income would it take to qualify for the loan? This is a real mortgage quote that I'm pulling. My name is Landon Buto. I work with Cleveland Street Mortgage based in Bothell, Washington. So this is a real quote, and hopefully we'll be able to get you some numbers while you're just poking around early in the process that are more reliable than you might be able to find with just an online mortgage calculator. So let's go ahead and hop in and look at the numbers. All right, I've pulled up two different scenarios. Hopefully one matches you relatively closely. I've done one that is 5% down here and one that is 20% down. Hopefully that'll be somewhat in the ballpark or give you a reference, even if it's not the exact number. And then for both of those, I'm assuming you're a 740 credit score, so that'll obviously impact your pricing a little bit. But just so you know what the assumptions I'm making going in are. These aren't going to be the exact numbers you would get. They'll vary depending on the day, but it should be a good reference. So the monthly payment, let's walk through the 5% down, and I'll show you the numbers there first and then pop back over and show you the 20% down. The 5% monthly payment is going to be $3,480 per month. And that's made of four different components here. You have homeowners insurance of $125 per month, and homeowners insurance will vary depending on who your insurance provider is and how much coverage you're getting, but that is a good estimate. That's a good number that we typically see for this price point in our area, but just know that will vary depending on who your provider is. Taxes of $375 per month. That's the actual number I've drawn from the county website for this property for 2024, so that is the actual number you can expect. Mortgage insurance of $104 per month. You know, you're probably aware if you put less than 20% down, you have to pay mortgage insurance, and that's that. In terms of what that number is going to be, this is a real number based on a real mortgage product we have, but it's going to vary. Your mortgage insurance will vary depending on what your credit score is. It will vary depending on how large your loan amount is, and it will vary depending on what percentage down payment you're making. So obviously down payment percentage and loan amount are connected, but 5% down regardless of the loan amount is going to be put you in another category for mortgage insurance than 10% down versus 15% down regardless of the loan amount. So all those will impact what your mortgage insurance is, and then who your lender is, how much they charge for mortgage insurance, or how much what their rates are for mortgage insurance. So all of those will impact what your number is. But yeah, just for reference, that number could be as low as if you were 15% down and you had more like a $300,000 loan amount or $400,000 loan amount. That number could go down to $30 a month. If you were 3% down and had a $700,000 loan amount and a credit score of 700 rather than 740, that number could be up closer to 300 easily. So just so you know kind of where that varies, what to expect there. And then principal and interest, and that's just based on your loan amount of $432,000 and your interest rate of 6.999%. Again, not an advertisement for that interest rate, but that is where we are at based on the assumptions that I've made to create this quote in terms of credit score, if you're a first-time home buyer, down payment percentage, all that. And so closing costs, we have $10,500 of closing costs, and your closing costs plus your down payment of 5% means you're going to have to bring $34,414 in this scenario to close this loan. So let's look at the 20% down. How do the numbers change now? The monthly payment now drops down to $2,921, and now we no longer have mortgage insurance. We only have three components over here, no mortgage insurance because we hit 20% down. And we have homeowners insurance of $125 per month. That doesn't change. Taxes don't change, of $375 per month, because those are both dependent on the house, not the loan structure. And then principal and interest of $24.21. Now based on a much smaller loan amount of $364,000, and the interest rate in this case stayed the same, 6.999. Closing costs drop down slightly to $9,680, and that's because your closing costs are going to be impacted by your loan amount. That's not the only thing, but that is the size of your loan amount is going to have an impact on your closing costs. And so now we have a smaller loan amount, so a little bit lower on closing costs. So our closing costs plus our down payment of 20% mean you're going to have to bring to escrow to close this deal. You're going to have to bring $101,875 to close the deal. In terms of qualifying, how much income would it take to qualify? Basically, for a conventional loan, your qualifying capacity is usually, or your ability to take on a monthly payment is usually about 50% of your total of your gross monthly income. So basically, if you have, and that's assuming, so the lender will approve you for a total monthly debts of about 50%, of less than 50% of your gross monthly income. As long as you're left less than 50% of your gross monthly income on your total monthly debts, so that's your housing payment that you're trying to take on plus any other monthly debts you have. As long as you're less than 50% with a conventional loan, then typically the lender will approve you. So for this scenario, in the 5% down scenario, that would be $6,960 per month that you'd have to be making, and in the 20% down scenario, that would be $5,842 per month. So that's about what you'd have to be making, and that's in terms of qualifying. I'm not talking about affordability or budgeting. I'm not talking about how much you should be comfortable with. This is just, would the lender approve you? It's from the lender's perspective, not from a budgeting or personal finance perspective of how much income you'd need to be making in order to afford this. We're not talking about affordability. We're talking about qualifying. Hopefully that's helpful just to get a sense of those numbers before you get too deep in the process of seeing where things are at. If you want to ask questions, or if you want to get a quote of your own based on your own numbers and on a house that you're looking at specifically, we do loans in Washington and Idaho. My name is Landon Buteau. I work with Cleveland Street Mortgage, and you can find all our contact information and just a bit about what it's like to work with our team in the description below, so please do reach out.